All right, everyone. Good morning, good afternoon, good evening. Once again, hour late to my attempted scheduled stream. 9 a.m. London time, 11 a.m. Riga, Latvia, Baltics time. I'm an hour late, so it's 12 here. 10 in London, 5 a.m. in New York. I'm sure everybody's having fun reading up on the old Epstein case. That thing's never going away. Let me know if you guys want to chat about something, see some charts. I have just a couple to start here. And I have a really good one for you, a really good one to start this stream. You know, every once in a while, it takes me a while to formulate the best charts that I think interpret my view of how the financial world works or my understanding of history. I think I found one today that's pretty good, and it's also very mathematically accurate and relatable to how you need to protect yourself with Bitcoin. So let's take a look here. Mentioned this book a lot. Definitely read it. It's called Scale by Geoffrey West. This is a little Gemini overview here. Geoffrey West, in his work on scaling laws, the book is called Scale, discusses how growth in cities and economies exhibits a super exponential pattern. So what is super exponential? We talk about power a lot with Bitcoin. We talk about exponential with the markets. What is super exponential? This means that growth accelerates at an increasingly rapid pace, with each increment leading to a larger subsequent increase. West argues that this super exponential growth, while initially beneficial, is ultimately unsustainable because it requires an ever-increasing amount of resources and energy, leading to a potential stagnation and collapse. I think the key word is potential there. He doesn't, he leaves it open. The paradigm shift, which can happen between each phase of growth or after, let's say, a few phases of growth, getting away from this mathematical singularity. Is possible. All right. He uses the example, and I'm going to show you a chart here, but he uses the example of, I said this on Marty's podcast a couple weeks ago. You're running on a treadmill, and it's fast. But then to keep up with the ways of an ever-increasing productive life, you have to harness technology. You have to use it a little bit better, whether it's moving from the horse and buggy to the car or from the landline telephone to the smartphone. You have to keep up in the world. You have to embrace technologies. It means when you move from one situation to the next, you have to move faster. And he calls it like jumping on ever increasing slope and speed of treadmills. So you're on one treadmill running, and then you got to jump to another one to keep up. And that treadmill's even running faster rate of growth. That's what he calls super exponential growth. And I realized, I collect a lot of data. I realize I have a good chart where I can exhibit this. All right. So this is the S&P without the trend from the 1800s. The S&P officially started in the 1950s, all right, somewhere here, around here, 1957, I think. 1955, maybe. Backdated it a little bit, but I think it was 1957 when we actually got all the S&P 500 companies in a stock index. There are various entities that have extrapolated behind that, the S&P itself, I think, went back to the 20s. I got this data from a gentleman named Nick Laird. He's an independent analyst from Australia. He back calculated his own index based on available stock market data at the time. I haven't vetted it. I haven't calculated it myself, but it's actually a very good example here of this super exponential growth. So we're on log scale. All right, so 110, it's base 10. Each level up is 10 times higher. Can I exhibit to you in a chart, one simple chart, this concept of super exponential growth? And I think I can. All right, so, it's just funny to look at the numbers, by the way. The actual index, if you calculate it, it'd be like 2, 3, 5. When the S&P officially started, it was probably, well, it gets adjusted. So I don't know if it was 100 when they started it, but anyway, now it's like 46. Right now, the actual is over 6,000. All right. It's an index priced in dollars, weighted average of top 500 stocks in America, mostly. Let's step this up, though, and I like to do trend lines. I like to try to show people the definitions of compounded growth, what it actually means, what exponential growth means. So let's draw a trend line with only the data going through 1914. Why 1914? I'm not such a huge fan of all the conspiracy, but I do understand it excites people. So the Federal Reserve did start in very mysterious ways without quorum in the United States in 1913, opened their doors in 1914. So I took this to almost the end of 1914. It's also the start of World War I. Let's just look at the growth of the stock market, all right? And I also projected it out, okay? So I zoomed in. There's a break right here. This little November 1914 is just to show you there's a break. What you see with this line is the best fitting trend line, of course, exponential, always exponential in the markets, for the stock market in the 1800s. All right, looks like this, extends out here. As you see here in my tooltip, this is an 86% R squared, pretty good. And the slope of the line, all right, the slope of the line, which is basically telling you what the stock market returns without dividends, 1% per year. 1% per year. That is literally only looking at the data from here to here and extending. That's it. And if you extend out the stock market 1% per year from 1800, we should be at today an S&P of 79 adjusted close. Instead, we're at 6,000. So this trend line doesn't work anymore. All right, so this is one treadmill. This is the first treadmill to look at. I guess I should say one thing about monetary inflation, right? So money is a way that we measure value and we measure trade. And the distortion of that money will also distort the trade. This is not only a story about money, though. It's to show you, like, there is also technological growth clearly happening. So I want you to, like, always think about that. I'm not a diehard, inflation, fiat inflation is the root of all evil. It is problematic, but there were things like, very simple things, like not enough actual change. The central bank never could allocate this money correctly. The free market would do it better. There are plenty of free markets where we did not have a central bank. But it is true that the central bank will distort the money supply and also the relative value of other things, even like a stock market index. So I have relatively accounted for that in these trends. All right. So here, there's basically no central bank. There were two here at the beginning in the 1800s, the first and second bank of the United States. Andrew Jackson finished the second one off right around here. Actually went down in the stock market when he was finishing it off. And then it went back up. Pretty good growth here, though I don't really see it in the stock market, interestingly. Very fast growth for the United States here after the Civil War. Here's the Great Depression starting here at the end of 1929. Huge dip. But I just want to say that, yes, money is a factor here. The relative value of money will change the slopes here, but it's not the only thing. It's not the only thing. And it's important to keep in mind what Jeffrey West writes in his book, that well, I guess he doesn't have it here, but that yes, there's an ever-increasing amount of resources and energy, but this is also there also are benefits from this growth because of technology. Right? It's clear that using a car is better than using a horse and buggy, unless you're Amish. And then we do have faster and better growth because of that. So it's just a natural trend in the markets. So it's a long-winded way of saying we have both in this chart. We have monetary inflation, but we also have growth. All right. So here's the first trend, 1%. I'm going up to the start of the Federal Reserve. Second trend, I'm going to start it in 1914. And I'm going to take it all the way to 1971 when we fully went off the gold standard. Here it is in black here. We jumped from one treadmill to the next. All right. Even with a huge dip, huge boom and a bust here in the 1920s and a world war. But again, this is not only monetary inflation. There is monetary inflation that's happening here, but it's not the only thing. We're still under a pseudo gold standard. So this black line calculates to here, this little dip, November 1971, and then it just projects out here. It's not looking at the data, just projecting. Where does it take us? Still well below today. Only 946, the projection. That's a bad projection. But for the time, it's a pretty good fitting R squared. Let's just take off it's a 78% R squared. 78% better than the average, basically. The data will move around this black line. 78% R squared. And the growth of the line, 2.5%. 2.5%. So we've jumped from one treadmill to the next here, from the 1800s to the 1900s. A very good depiction of this treadmill analogy, super exponential growth. Now, let's jump to the next one. Again, I'm using the monetary epochs, but it's not the only thing in the picture. Of course, there is better technology decade after decade. That's also a part of this story. 1971 trend is going to start here, and it's going to go to 2008. About what you'd expect. Moving from one treadmill to the next. Faster and faster growth. All right. Data stops calculating here. I'm only looking at the data before 2008, and then I just project out. I'm not looking at the data on this blue line beyond 2008. So what does it show us? Actually, markets are under. It's a very interesting little observation. In 2025, markets are under what we should have been. Interesting. (2008) was a big one. Remember Ron Paul with using the Dow or the S&P as a measured against gold? He likes to say that 2000 was the big one. Big crises here. Big drops from the dot-com. Big drops from the 2008. But even, going up right to the 2008 crisis, basically. And again, the monetary order completely shifted after this. The printing of money completely shifted in the way that they did it after this. But looking at this curve from 1971 to 2008, 95% R squared, even the best R squared we've seen, and a 6.5% CAGR. All right, so the slope of this curve will double roughly every little more than every 10 years. All right, 10 years would be 7.2% compounded, rule of 72. 6.5 is a little bit slower than 10 years, 11 years, whatever it is. But that's the slope of the curve through pretty much when everybody watching this video for sure was growing up. Even, I know I got some pensioners watching. Guys, let me know if what you think about this. But, you know, I was growing up here in the 80s and 90s. And this was the slope of the stock market, 6.5% per year without reinvesting dividends. But look at this. Very interesting portrayal of super exponential growth. But also very interesting that we've fallen from a trend a little bit. Okay. So let's now see the slope from 2008. All right. Now remember, we're going to be starting from a different base. We're going to start from way down here. Right? Remember, the S&P bottomed in somewhere in March 2009 at 666. This is the close, 798. What does the slope of this curve look like? Interesting. All right, it's way lower now to start because we have a lower base, but it's growing faster. Almost double. Almost double the prior trend from the 70s, 80s, 90s. Start of 2000s. So here we have a little bit of a mismatch. The treadmill looks a little bit wonky. All right, this is a little bit more stable treadmill jump, even though it's not stable for people at the time in the Great Depression and World War II. This one's a bit more stable. This one's a bit wonky. All right, we have big stock market collapse. And again, I take the point. I can draw trend lines at any starting date here, right? But generally, if we're going to go by monetary epochs, this would be it. All right. This trend will, of course, be faster than the 1971 to 2008 trend at some point, but it's going to take a while actually to catch it. So, you know, a couple things to take away from this. First of all, where one is right now in the stock market, you got to get 11.9% CAGR to keep up with the stock market. That's not even reinvesting your dividends. You can reinvest and you can get more. But stock markets, you know, if you've been in since the bottom, basically, in 2009, this is what you're riding at, 12%. And we're pretty much right on that trend. So as far as the trend line goes, we're looking pretty good on the 2008 trend, but we're way under the 1971 trend. So there's a couple interesting takeaways there. The main one is you got to get 12% per year. You have to get it. And I think, you know, again, I'm not a big fan of plotting inflation rates. Right? That's free real estate for a lot of people. I've said this many times. I don't really plot it on my website or things. I prefer plotting corporeal stocks, actual things, stock market indices, money supplies. Even GDP is better than a price index. The price index is very political. GDP is kind of political too, but at least there are some numbers to back it up. Price indices are very difficult to correlate, to backtest, to even believe they might be correct. It's a lot of bureaucrats taking prices, and you know they might not be taking the best prices to measure. But prices of things that exist in the market and can be tracked pretty transparently, like a stock market index, that is a relative measure of supply and demand. This is a great illustration, in my opinion, of this super exponential growth that we live in the world. We're not going back here. We're not going back here. We're actually trying to catch up to this, and we are. We're at a faster clip. But this was a huge, there's huge issues here in the financial system evidenced themselves in 2008, even in 2000. So you'll have to embrace change, technology to keep up with this growth and to keep up with inflation, the monetary inflation that they give. So, of course, I think Bitcoin is the best way to do that, but everybody knows that by now. But if you look at that tooltip, right, this is closer to today, 6,000 S&P. If we went in the trend of the 1800s, we would only be at 78, growing at 1% per year. So it's not the trend that we're on. If you went from the founding of the Federal Reserve to 1971, you'd be at 946. It's not the trend that we're on. Interesting, the post-fiat world, 2008 ran way hot, even it was only 6.5% CAGR. And now we're trying to catch up to that even more, running at a 12% CAGR since 2008. It's both. It's monetary inflation, but it's also technological growth. It's both. Buying and holding stocks is a perfectly legitimate endeavor. I think ETFs that give you the broadest basket of returns, perfectly safe way to go. But as I've said, we have another opportunity, which is Bitcoin, not financial advice, as always. The best slope, that is this red line, remember, it's running at a 12% CAGR, right? 11.9%. That's without reinvesting dividends. Okay, so that's doubling close to every 5 years. Your return will double. Like the markets, the trend itself, the markets were around 1,000 in 2009. They doubled to 2 in 2015, 5-6 years. Right? That's what 11.9% CAGR means. What does Bitcoin give us? In actuality, it gives you these returns, which are very volatile. But you can see as you smooth it out over time, we have that gentle sloping power curve. As you get closer to today, this calculation gets a little crazy. This will smooth itself out. All right, this is a backwards adjusting chart. Okay, this adjusts itself all the time. I'll smooth it out for you. It's here. All right. If you were lucky enough to get in back here in 2010, 2011, congratulations, you're still over 100% CAGR to this day. To this day. But now, if you get in, you're about 42%. 42%. And you got a long time before this reaches anything like this. All right. Remember, this is a constant growth rate. The percentage is fixed. The percentage is constant. So it's 12%, 11.9% per year. Bitcoin won't reach 10% until like 2140 on this. Right? And I want to be clear. That's not when it will reach 10% trailing 12 months. That will happen in like 2070. But where it will reach 10% if you bought it and then held it, because it will have this slowly decreasing return. You could hold it today for 100 years and your CAGR would still be 10% 100 years from now. So Bitcoin has the best risk reward return, the best way to protect yourself from monetary inflation possibly we've ever seen. It's an amazing, amazing technology. Got to keep it decentralized. But it's incredible, and it runs on a very predictable power curve. Yeah, here I pulled it out way. Look at that. I pulled this one out to 2085. You're still at 15%. Okay, that means if you bought Bitcoin today on the trend, 108,000, it's a little bit cheaper than the actual price today. True, but if you bought on the trend, 108,000, you could hold it to when it was going to be worth 773 million, 74 million in 2085. It would still give you a 15.9% return year on year. So these two technologies will merge. That is fiat and stocks. And let me know, guys, if you want to look at, some other things here. Got to pull up this chart. But yeah, this is, I'm putting this one back in. I mean, this is a great example of running from treadmill to treadmill. And it's dangerous. I mean, it's, if you didn't get out here before the, in 2007, your investments are halving at this point. It's very dangerous. Nobody can say that the stock market is somehow safer than Bitcoin. It certainly doesn't return as much as Bitcoin. All right, whether that was here in the 1920s or here twice in the 2000s. Good morning, Dimitri. What's coming out? Is that some code there? U3E prices. Monetary inflation, I define as the increase in the monetary base. As far as what we keep up with, I think it's different for every person. It's different where you live. Good morning, Sandro. No problem. Good luck with your work. Appreciate the good words. So yeah, Dimitri. I mean, obviously it's different for everybody, and everybody always tells you that, right? I think the S&P is really one of the best because it's got great long history and it's most of the value of big tech companies and other companies. But whether you look at the S&P or the growth of money itself, you're going to find numbers that are, this is where they get to the term real return, right? So like if the S&P grows, as it here is, the red trend, the current trend at 12% per year, but inflation is 6% per year. then your real return is only 6. I just think it's impossible to calculate the real return. I honestly do. Because, you know, I mean, nobody's even going to have these stock returns, right? Like, this is a completely mathematical thing. I don't have it. I'm sure you don't have it. Like, I'm picking dates. I'm finding numbers that are somewhat representative of growth. Thank you, sir. Appreciate it. It's getting harder. It's getting harder. That's for sure. But I'm just trying to not come at it too bombastic, like a lot of the hardcore Bitcoiners do. And that's fine. We all come to the same conclusion anyway, but hold Bitcoin. That's the way to do it. There's both growth, there's both technological growth happening, there's also monetary inflation happening. So you just got to battle through those things. But this, so Jeffrey West in his book, what he talks about is this mathematical singularity. I don't know if it's picked up here, but basically you can see it here. If you move from one treadmill to the other treadmill to the next treadmill, and it's faster and faster growth each time, we will get at some point to a straight line, which is an infinite, which is impossible, which is he wrote his book, actually, this book, Scale, around the time, if you remember, 10, 15 years ago, Ray Kurzweil was very popular on the singularity of basically AI or whatever, machines and humans coming together, which was, I believe, under his estimate, like late 2030s. West is not talking about that. He's talking about a mathematical singularity. And he doesn't give a time frame either, but he does think it could take longer than we think. And I would agree with that. I would agree with that. Because even though exponential growth is crazy fast, as long as it's not, it all just depends on that slope of the curve. We can go on this for a long time. I think in both cases, if you look at this 1971, which again is interesting, we fell so much off the 1971 curve in 2008 that even to meet those, we got to get back to 2040, 2057. So that just one observation. It could take a long time. Or maybe AI puts us somehow, maybe we'll see that large language models will put us on a faster curve on the markets even now. So we'll catch this blue line even quicker than 2040, than 20 years from now. That's a good question. I like this question. Do you think the technological revolution can help stop inflation or only sound money will, or a combination of both? A hardcore Bitcoiner would immediately go to sound money. I mean, I like your answer, a combination of both. The thing is, money itself is a technology, right? I'm not trying to sound smart or use semantics here, but Bitcoin is obviously a technology, and we've built up a huge lore around it, which is good. I'm not saying this is going to happen, but if there was a better system than Bitcoin that could give you all the benefits of Bitcoin but not be proof of work, all right, where you have to spend all the energy in the real world, then that technically would be better. I don't think that's going to happen. I think, proof of work is necessary to show that there's value tied to the real world behind the money. But I'm just using that as an example of there's a new technology that, again, could come in and break Bitcoin, so to speak. I also wonder what the role of will be for the old monies like gold, silver. They're pretty constant, been around for a long time. The only thing that would really break those is if we can mine asteroids, and everybody knows that they're there. Like you've seen the research. You know, there's $500 trillion worth of precious metals like somewhere capturable around the Earth. So that would clearly destroy the gold industry pretty quick. And from that side, Bitcoin remains the only non-inflatable asset in the universe that we know of so far. So I like your suggestion of a combination of both, but I do think technology is a big part of it. I think you got to embrace AI. You got to embrace the tools that it's using, that it helps you do. Saves you time, makes your day more productive. But Bitcoin is one of the greatest tools for sure. That gives us like freedom to not have to worry about the big tech companies stealing our data and harvesting our data, I guess I should say, which AI so far is doing. Probably not the full answer that you wanted, but that's just what I'm thinking at the moment. Good morning, Anders. Good morning. Good afternoon. Yeah, that's part of it. I often go back to the war stuff. As you guys know, it's very sensitive for us in Eastern Europe, but a lot of Bitcoiners don't even want to think about any wars or any government. They'd rather move to the Caribbean or wherever. And that's a totally legitimate thing to do, by the way. If you have the ability, the freedom, money gives you the freedom to do something different than the current system, you should do that if you can with your family. I don't even want to say you should. Maybe you could do that. I think this is a bit deep on the philosophy today, but you read these books like The Sovereign Individual and all that, and it's really interesting stuff. It's just going to be a lot of chipping away, right? I mean, chipping away at the current system. But I think that probably for all this, there's no start date, there's no end date. We often paint the picture of where we want the utopia to be. And so what that means, really, to get back to your question, is I do think that everybody's going to continue to grift, even so-called sound money, fiscally responsible governments in the Caribbean, if that even exists. I think we've seen problems with that in the current system, but there's also weapons. I think Peter Todd, this is another reason why Peter Todd, very well-known Bitcoiner, is such a huge fan of Ukraine. I mean, he's got his own personal reasons, but he's such a huge fan. And he's also, I more and more sort of trend to this direction, is at the end of the day, you do have something like a government that would be necessary to stop other governments from attacking. I know that the best libertarian way around that is just move around the government, move away, stay away from the government. But anyway, that's the tangent I just went on from your question. People are going to be fiscally irresponsible, and that's what the government tends to do. But hopefully less so. Hopefully the government, the IRS is terrible as an entity. I hate dealing with them personally. I still have to as an American abroad, but they're still like sending letters. It's unbelievable. They will change that. They will get better. Governments, in Latvia, it's all online. I'm sure it is in Denmark. Good morning, Slanik. Yeah, great book. Very great book. Heavy on the math. Yeah. I think Jeff Booth's views are pretty solid. He's a Puritan. I mean, he's a Puritan there. When I hear him speak about Bitcoin, I think it's very eloquent and nice. But I grew up in Canada, and he has his own views. I guess he says he's leaving Canada, I think. He's certainly going down the full Bitcoin rabbit hole. There's some people that can't leave, or for family reasons might need to be even in the midst of a border war zone. It's really hard. I don't know. It's hard. So I can't obviously answer all those questions, but this is really cool. I think if you put this, because the stock market does reflect both. And it reflects productivity, technological growth, and monetary inflation. So you do have both. You got to kind of get through it. But it's not only remember, the stock market and your profits can go up even with deflation. This is a hard question people need to think about a lot, right? It's just historically awkward to deal with that deflation in contracts. I've talked about this a little bit, right? So if I have a product and I sell it and the price slowly declines, as flat screen TVs have, and also my costs slowly decline, but my costs fall farther than my prices I charge to you, you can have an increasing revenue as everything's going down, right? You can do that. So you can have increasing asset values as prices fall, which you could say more or less happened here, right? Maybe it's 1% per year, increasing asset values. There was no central bank here. Gold standard. Silver standard, actually, back here. Dollar was 371 grains of silver, 80% of an ounce. So yeah, you can have that. Yeah, it's unbelievable. Yeah, that's my understanding. He's done well. He's done well for himself. So it's faster and faster treadmill. And West, when he's in his book, it's not he doesn't really touch on inflation that much. He talks more about the math, about scaling, about growth, and sustainability, which I think is all that is also very important. So for me, it's not all about currency debasement, although that is a part of the picture. You know, like I don't think, even though, you know, we suffered for centuries with the sovereign grifting us on their currency, like, um, they were still using gold, and it took us like 2,000 years to get to where we are today, with finally the hockey stick growth in the last 50 years. So, yes, government, bureaucrats, all leaders can be corrupt and steal. But the technological growth that happened in the last 50 years is way bigger, actually, if you think about it, than the monetary growth. So, but Bitcoin's going to be the thing that will harness that technological growth, right? You can build an AI agent to work for you that gets paid in Bitcoin. Who knows? Who knows how it's going to be? Let me know, guys, if you want to look at anything else. Here's another one back. I showed it yesterday, but you know, the only one that's really strange remains Apple and Microsoft and Amazon. Just a few big cap stocks, because they will grow in a straight line and Bitcoin will grow in this curved line. And that 23% CAGR that Apple has done since 2008 is way more than the stock market, which is 12% CAGR since 2008. But gold will be passed. By 10 years from now, will be bigger than the gold market. Although that does assume gold chills out here, because the last 10 years have been pretty flat for gold. Only 6.2% CAGR. Pretty low growth. And gold is way above trend right now, as you see, way above. Bitcoin's at trend. Gold's way over trend. Treasury markets, Bitcoin's going to pass them in 20 years, 15 years. U.S. Treasuries, base money, it's the same, nearly the same size. And then broad money is going to take a little bit longer. 2048. But since all of these things, even huge things, are, you know, like the world money supply is growing at really not that fast of a rate, 5.4% in case of world broad money. World broad money was actually growing faster pre-financial crisis. A lot of repurchase agreements, other things that got scaled way back after the financial crisis. A lot of people don't talk about that. So, yeah, Bitcoin can easily catch that rate of growth, because Bitcoin, even though the rate of growth is declining, it is still growing super fast. But the only one that it has trouble with is Apple or Microsoft or Amazon. Probably NVIDIA too now. So this is where I keep saying this is actually maybe proof that the current system will either bend to Bitcoin and start moving power. Apple starts putting Bitcoin on their books. We start getting into a SAT standard, or everybody keeps their current debt capital structures, interest rates, compound interest rates. Remember, compound interest rates can only be a straight line on log scale. It cannot work like this, like Bitcoin. If you slap an interest rate on anything, it's going to look like this eventually. Doesn't matter if you're an annuity or constant principal pay down, or 0% interest for a time and then a balloon at the end. It's always going to grow to this effect of a compounding effect. You wonder if, like, Satoshi had any idea that his system was going to grow like this. It's a lot of dead time. Sorry, thinking. Can I show you guys anything else? You want to look at something exciting like interest rates? Jeffrey Epstein stories? Hold on. Gold is an interesting wild card, though. Just going back here, right? So this is $3,300 an ounce gold gets you to 20 trillion, 10 times Bitcoin. You know, I don't know necessarily what to think about gold still, because it's increasing in the coffers of central banks, not decreasing. They're the biggest buyers. Yeah, it had coinciding with Bitcoin, which this chart does. It had a pretty shoddy 15 years. Peter Schiff hates it, hates the performance, but it could go, it could go stronger, even with a stronger Bitcoin. Let me show one more here. This is also super interesting, in my opinion, which I showed yesterday. Yeah, I wonder what the rate, though. Because out here, 6.2%. This R squared is okay. It's one of the weakest ones, actually, at 71%. So gold is, it was really high in 2011, right when Bitcoin started, and then fell down. So it could outperform. Yeah, I think definitely at a slower pace. And then here's the money itself. Again, measuring these things. Most of these, all right. So Bitcoin just about to hawk physical U.S. dollars and coins. Outstanding. 2.4 trillion versus right now, I think market cap is even closer to 2.3 trillion, right? This is a monthly close, so we'll see what happens at the end of July. Bitcoin's going to be worth more than all U.S. printed notes and coins, minted coins very soon. Let me pull this up for you. Just as an example, again, why I like growth rates versus other stuff. The dollar the rupee, the yuan are growing here in dollar terms. All right, so the dollar, the rupee, and the yuan, all three of these are growing at about 7% per year. All right, that's the slope of their curve, of their regression. I'm not showing the regression here, but the trend line, but that's basically the slope of their curve. And obviously, U.S. was slower before the debacles of 2020. Now it's faster growth. The yen, so the euro, interestingly, again, has lost a lot of value against the dollar from 2009. So this is measured in dollars, again, Wittgenstein's ruler. So the euro grows at only 3.5% per year in dollar terms. That is physical euros, physical euro notes and coins that have been printed. It's about 1.9 trillion outstanding dollars worth of euros. But the yen, unbelievable. This is just like, again, I just get in awe of how much printing they do with the yen. It's a huge economy, one of the biggest economies in the world, and they just keep printing. Where the currency itself gets weaker against the dollar. And if you measured that, the growth rate is negative 0.1% per year. All right, 847 billion when this chart started, $906 billion worth of yen. That's disastrous. It's a disastrous amount of money printing for Japan. And it's also possibly indicative of the way that the other fiat currencies will go, I think, especially if they're not adopting Bitcoin. If they start to look like the yen. You think about Peter Schiff was poo-pooing Bitcoin like when it was a $0 billion market cap. Somewhere around here. And now it's a $2.3 trillion market cap. 2,300 billion as of right now. So yeah, I don't know, guys. That's all I had planned for today. Very philosophical for a little bit there, and then some other real world things. But read scale. Try to think about it more. It's not just about money. It's also about technology. It's about growth. It is. It just is. And it probably is as well, going back to what Anders said here, and also what you said, Bitcoin Libertarian, about what can stop inflation. I mean, allowing them to be more fiscally irresponsible. You know, I don't actually even know, because relative, I'm always thinking about the charts to try to explain the thought process. But, you know, if you look at this one, which I also showed yesterday. Sorry, 1 second. 1 second. If you look at this one, which is debt versus U.S. national debt versus Federal Reserve holdings. All right, so the Federal Reserve holds this much of the debt. I know I got my zoom here, which is annoying, but let me do it here. All right, they've held as much as $8.5 trillion worth of debt. Now they're only holding $6.5 trillion. You know, it's probably true that, well, firstly, if you look at this, clearly they can. The Federal Reserve can monetize more debt. They have monetized as much as 28%. Now it's only 18. As we know, Trump wants interest rates to go down still to this day, and they will, and they'll monetize more debt. But even beyond that, if the Treasury started backing some of this debt with Bitcoin, that would help them even to create more debt. So we're going to run through this, you know, this trial and error of more and more debt maybe adopting some sound money Bitcoin for, I think, for quite a bit, for quite a long time. I just don't see any other way around it. If you look at the data, I mean, even here, like the worst times of the U.S. during the Vietnam War, this is literally the end of the Vietnam War, was here in 1975. It topped out at 18%. And this is also after the end of the gold standard. So people started to, central banks and governments and banks around the world just accepted dollars as their main form of currency reserve. It allowed the U.S. to even print more debt. So it will come down to what the government of the United States does with the debt. I think that's, you can't, there's no getting around it. No one's going to want to hold Chinese yuan as some sort of a reserve, even if they hold a lot of gold. It's not going to happen. But if the U.S. government buys Bitcoin, if they ever get around to it, then yeah, I think this could go on for a while and maybe even allow them to be even more fiscally irresponsible, as you say, Anders. So. Yeah, we're just going to have to see. Holding Bitcoin is not a bad move in either case. Good evening, Tim. Good evening. Yeah, I mean, it's difficult to see all at once, right? We go back to this Federal Reserve, Fed funds, FedWire chart, which is the little movement of federal funds. Put that up for you guys, and you see how huge it is in volume, like unbelievably huge. Yeah, totally possible. But here's the old, remember, this is Fed funds, the movement of those bank reserves, all right, which is part of the monetary base. And let's do that in logs, take that off. All right, so remember, Bitcoin is way at the bottom of this chart. This is linear scale, way at the bottom of this chart. Only $7 trillion worth of Bitcoin flows through the system on a trailing 12-month basis in transactions. It's a hell of an accomplishment. It's unbelievable. But FedWire does a quadrillion. So I don't think the infrastructure is ready in Bitcoin yet, and certainly the infrastructure is not ready in the fiat world yet to just change to Bitcoin. It's kind of irrational to think that way. It's a totally bullish chart for Bitcoin. I mean, but we're still 157 times smaller than what the Federal Reserve transacts on a yearly basis. And that's only the Federal Reserve. You still have Euroclear, you have chips in the UK, and you have all the other centralized central bank networks. This is not SWIFT. This is their central bank clearing network in the country that uses that currency. It's massive, massive amounts of money. If we use roughly the ratios that I see for any money supplies, other money supplies, I presume the world global base money transacting value is at least $3 quadrillion worth, right? At least three. 3 times this number. Yeah. Everybody has their own time to buy Bitcoin. That's probably the best phrase in Bitcoin, as I've said, is everybody gets the price that they deserve. It's kind of interesting just to look at the Fed itself, right? Huge decrease in transaction volume from 750 trillion at the end of the global financial crisis to, sort of double hump of, take off Bitcoin in this just to see. 750 down to 600, stayed there, then up to 880 mid 2015. Then it fell again, and this was coinciding with the Federal Reserve shrinking its balance sheet. Remember, they had, $4 or $5 trillion worth of a balance sheet here, and they shrank it down to a number that I don't remember, but it was less than that. I have it right here. They had 4.2 trillion, and they shrank it down to 3.6, 3.5 trillion roughly in August, September 2019. Then the repo spike, and then of course the massive, crazy days. It's kind of weird just to look at that in itself. Bitcoin is just trucking along. I don't know. I mean, I don't know. Theoretically, these L2s, L3s of Bitcoin are going to be pretty incredible, pretty free. But there are more and more trusted elements, right? I don't particularly understand all the ins and outs of, say, how Fedimint is working or Cashew, the Chalmian mints of Cashew. But the trust builds there, and you then get infrastructure costs and also risks. And I guess you could. Don't know if theoretically you'd want to even do that, because it's probably going to look different. It's probably going to look differently. This is what you're looking at here is the core transactions of the U.S. system, and I do think that eventually this will be the core transactions of the Bitcoin system. It's just at some point this dollar amount is going to morph into Sats amounts, and I think it will just happen sort of natively. I mean, organically. But I think eventually at that point you'll see. I mean, yeah, I guess to try to preserve some integrity of the institution, like they'll set up a Bitcoin-based Fedimint or something. But it's also possible they don't survive it. But my point here is it's going to take a long time. In my view, this is not an overnight thing. Wars are a problem. Certainly keep my attention. like the government can still existing as a government and still hold debt while operating in Bitcoin. That's another thing that very well could happen, right? So then the central bank either dissolves or becomes some Fediment layer, and they try to keep their dollar tokens running on Bitcoin for some time, or an L3 layer, RGB layer, or something like that. But um, this is a pretty good chart, right? What you're looking at here in the green line is the percentage of the U.S. federal debt that the central bank holds. Right, so it's literally the monetization of the debt. And in a bad country, like Zimbabwe, this would run to 100%. The government would be the only entity buying the bonds to finance the deficit. That's not the case here. And it wasn't the case even, when we had like semi-gold standard here, it was very low numbers. It takes a long time. So again, I do think it points back to these charts. I think we got another 20 years at least to sort a lot of this stuff out. But yeah, this could sort of dissolve or just turn into Bitcoin. And then the government can issue debt in Bitcoin. But that gets very difficult because there's only a limited amount of Satoshis. You can't print Satoshis. Yep, 100%. The social nativism, nationalism is, I think, huge everywhere. I was talking to a friend in, Mexico. It's there too. They're having a little bit of some rebellion against tourists or gringo tourists that kind of think that they're different, don't think that they're. I mean, they're not Mexican, obviously, but they're tourists. They're trying to be above the laws or not pay as much or whatever. And everybody's. It seems like it's the worst right now in the U.S. and U.K. But it's all around worldwide. I didn't want to get too political, but what's happening in Ukraine. I mentioned it yesterday. It's pretty interesting. Based on this bill that I guess is still going through, where it's separating or bringing the anti-corruption bodies in Ukraine under the president's cabinet. One of my favorite journalists here, Ilya. I'll just read this because it's important to me. And if you guys are watching, hopefully it can be important to you. So, again, if you're not sure what's happening, the parliament, even pro-Russian parties in the parliament, have gotten on board with this idea of bringing the anti-corruption bodies that were independent, at least not under the president's, the presidential admin, the executive branch of Ukraine. They consolidated it. That's possibly a challenge for EU accession and other things. So Ilya is a great journalist here. Wonderful follow if you don't follow him. And look, Ukrainians are rallying during wartime. They're getting bombed at night, and they're rallying. Like, you're never going to see this in Russian. To me, this is amazing because you're never going to see this in Russia. It's a complete shit show there. But just to read this. So today's rallies in defense of the independence of Ukraine, anti-corruption institutions in Kiev. The funniest part is that Russian Z fascists are watching it, rejoicing and rubbing their hands, thinking that these rallies somehow bring Ukraine closer to collapse and defeat, while in reality, it's precisely the fact that Ukraine's civil society takes to the streets, protests, and keeps kicking its own government in the ass, even during wartime. This is one of the key fundamental reasons why this country broke free from Russian colonial subjugation, is carrying out difficult and painful reforms, reviving its identity and national pride, and has been resisting Russia's power for 12 years already, including 3.5 years of full-scale war. Makes Ukraine stronger, not weaker. It's unbelievable. I mean, these people are literally protecting my country from war. It's just incredible. These people are getting bombed in the night, protesting during the day. There's going to be no deal struck between Ukraine and Russia or whatever. That's for sure. This thing is not, this is totally different. This anti-corruption has nothing to do with the deal between Ukraine and Russia. But there is some realpolitik going on there with this anti-corruption body wanting to be brought under the presidential administration. That's antithetical to EU accession policies. I don't know, Anders. I don't know. This is a good question. I've read plenty of people that speculate that he's trying to, cover up his own corruption, but to me, that's also a Russian narrative. Zelensky, from the beginning, you can find videos, was like he was a millionaire before he got into government. Like, doesn't mean he doesn't try to be corrupt after. But remember, there were plenty of fake stories about Zelensky in when the start of the war, all fake, about like buying yachts and stuff, proven faked, all Russian disinfo. And he was always saying, if you see corruption, if you hear corruption, report it, this and that. His reasoning, I have heard, is because these cases were stalling. There was nothing happening. And there were people that were corrupt that were not getting tried. So his reasoning was he was going to do it better. But, again, I'm not there. I don't know. Have not talked to my friends in Ukraine about this. But it is, it's interesting. Again, the disinformation is so strong right now. There's so much misinformation, I should say, not disinformation, to use the J.P. Lindsley phrase. Anyway, these people are protecting us. And I know that that's hard for a lot of people watching this who might not live in the Baltics. Not hard for the Danes to understand, and I think the Brits as well, but and this is where also I come back to the reality of like something like this. Or something like this. Actually, I should say something like this, because this is the actual money that gets spent. I get in these sort of mini arguments now at Bitcoin conferences because, in my mind, there's a lot of people, their heads are just completely in the clouds. And I know that their heart is in the right place, but, look, I want a free and decentralized world as much as anybody, but Bitcoin's not going to stop bombs from falling on our heads. It's only deterrence. It's only deterrence. There's a lot of good that can come from Bitcoin, but the system as it stands is not integrated to Bitcoin at all right now. And free markets are still going to work. Here's another one just to show you, guys, so you don't think I'm completely rambling. Again, a real concrete difference in Russia versus Ukraine, I have to just read this one, is so this is from a young Ukrainian girl, also very good follow. She's been pretty pro these protests. So in Russian, even thinking freely is becoming a crime. So yesterday, the Russian State Duma passed a law so vague and absurd that even Putin himself probably couldn't even explain how it actually works. Starting in just over a month, Russian citizens will face fines up to 50,000 rubles for intentionally searching for prohibited information. Here's Russia's Christian conservative free market values for you. 500-page blacklist of forbidden content, constantly expanding like a Kafkaesque hydra. Risk of being labeled as an extremist just for opening a link to a banned site. Penalties for VPN or even advertising VPN services. A ban on sharing your SIM card, because in Russia your phone now belongs to the state, not you. And finally, the threat of losing all your logins, passwords, online games, and subscriptions. All right. So America still has free markets, free capital. Ukraine is absolutely going to join that. There's no going back. For people that are like trying to stir up shit on Twitter, like there's just no going back for these people. They've sacrificed too much. These people, I mean, they continue showing that they're weak in front of power. They prefer power. They prefer to be subjugated. Yep. Very lucky to not have been born there. But yeah, bottom line, going back to my talks about when I'm at conferences and Bitcoin conferences and talking to people like this, this is usually an American, all right, that's strident, anti-government, free market person. Usually someone that lives pretty comfortably in an air-conditioned office every day. And probably is following some bad advice from folks like Tucker Carlson, who's somehow acting like Russia's a free society. And that's going to take real world, like meat space, grassroots movement. Bitcoin will be a part of it. You know, I was in Maidan in 2014, and there were Bitcoin QR codes everywhere. I have no idea where those QR codes were going, if it was people were getting scammed or they were actually using it for the movement. But, you know, charity is charity. Please do, Anders. That goes to anybody watching. If you ever want to come, I can take you around. I got good friends in all countries, and we got Honey Badger coming up here in 2 weeks. Two and a half weeks, starting the 9th, Saturday the 9th of August. Be nice and warm. Poland was good. Poles are strong, man. I mean, you can just tell how, because like us in the Baltics, but much worse, they suffered under both regimes terribly, both the Nazis and the Soviets. You know, because they were the first ones that got invaded by the Nazis and the Soviets together. And they had such destruction in their society. And what I've seen, and I'm sure you guys have seen it too, like, there's a good follow on Twitter. This guy, Michael, what is his name? I'll get to your question, Tim. But this, yeah, Michael Arrowt. All right, you guys know this guy? It's a good follow. Standard of living in Poland reaching the level of Spain, Japan, Italy, and the UK is a true free market economic wonder. All right. So here's Poland coming out from nowhere in terms of GDP per capita. And by the way, we're right here in the Baltics. We're the same. We're this is PPP, so it's I don't actually know the numbers for the Baltics, but we're very close. So the Baltics have basically been following the same track of Poland, but Poland's a huge country, and traveling there was interesting. Just seeing. I mean, it's very nationalistic in a good way. You know, not Nazi, but nationalistic, and very just you know the Poles I talk to and the way that they want to live, they want to live in peace. They don't want anyone invading them. They don't want to invade anybody else. They've seen all the problems of the 20th century, and it was nice. I mean, it rained a little bit when we were there, but we went to Sopot, which is this beach town between Gdansk and Gdynia. Great food. I was actually surprised. We stayed at a nice hotel, the Grand Hotel Sopot, right in the middle of it, by the pier and everything. But you know, just from having casual meals at the hotel or other places, everything was really good, really tasty. And the only problem Poland has is the weather. It's rainy. It's been a bad summer up here in Northern Europe. Definitely, you guys just reach out. Be happy to buy you a beer, show you around. I'll expect the same when I come to Denmark or Australia, Tim. Never been to Australia. This is a good follow, though, this Michael A. Aru. He's just solid on, you know, he just posts a lot of free market stuff, talking about how China's pulling away anyway from the UK. You know, their industries are just exploding. You talk about climate change. Obviously, China's also the main contributor to that. So he just very simple stuff that I probably should do more, but I put out these way too much time on these line charts and then talk about them probably too long. But anyway, that's what I do. Thanks. Our house. Our house. That way that spelling is I used to do some work for a real estate developer. That was a name of a high end, like a high end Home Depot in the U.S. Our house, spelled that way. But yeah, I mean, exciting stuff, crazy stuff. Got any good advice? You buying call options? I'm listening to this Ukraine, the latest. It remains one of my favorite daily podcasts. The guys do a great job. British outfit from the Telegraph, and they interviewed a representative from Moldova yesterday on the show, and it's just so interesting to hear this side. I mean, these guys are. He talked about how there's evidence in the government that 8% of the voting population, it's a very small country, right? It's a couple million, Moldova. It's got this Transnistria Russian gas little border, and they've cut off all the gas to Moldova, and now they're letting their own people in this Transnistria area suffer because of that. But anyway, talked about during this election, which they got in the pro-EU people, the pro-democracy people last year, or this year, maybe started this year even. And there is documented evidence that 8% of the voting populace, which is like hundreds of thousands of people, 8% was paid to vote by Russia. So Moldova is probably more on the front lines than we are, right? If Ukraine falls, Moldova is next. And they're not going to be able to put up a fight like Ukraine, but then we are after them. We, of course, have more weapons, more border to defend, and we have these bunkers and everything that we're continuing to build. And we have NATO, but obviously, as you go down that checklist, things become a little bit more vague, and you have misinformation, and you have a lot of Americans that don't want to help because of the forever wars. So, got to deal with it. Anyway. I have faith in the people of Ukraine. That's for sure. They're not giving in. It's all looking good for Bitcoin, guys. Still, yep, probably a good asset to get exposure and then get out of if things get too hot. And speaking of getting too hot, I know I show this chart every day, but nothing's changing. Finally got my APIs pulling in recent chart data, so if I pull it into the model right now, I am showing a Bitcoin price of $118,331. $118,331. Not even close to the 90th percentile. Right around trend. Right around fair value. And these are where your levels are by the end of the year. But again, I think you're probably max here. Max, in my opinion, by the end of the year. Yep, I agree, Anders. I am bullish as well. Anything else, guys? I think I'm going to shut it down for the day. Hope you guys don't mind me swinging from Bitcoin to politics, back to Bitcoin. Mostly Ukraine when I say politics. I know it's not a typical view from certainly the American audience. I think the European audience feels me quite a bit more. Good night, Tim. Thanks for checking in. Keep the guest bedroom open. Got to make a trip down there someday. Thank you, Anders. I do. It's mostly making spreadsheets and charts like this for some investors. That's the work. It's good work. I mean, it's good in that I'm good at it and can do it. But it's nothing, it's nothing too crazy. And yeah, it's good. It's good lifestyle when you can work out of the office, I guess. let me know if you guys want to see any different charts. I will keep printing them out and bringing them to you here. So the treadmill keeps increasing from 1% CAGR to 12% CAGR over 125 years. Thanks, Anders. Thanks, Tim. Thanks, guys. Take care. I'll see you tomorrow.